from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Taylor Riggs and for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, New York State reporting a one-day record of more than 21,000 infections, all as the Omicron variant spreads in the U.S. We'll bring you a virus update. Plus, Theranos founder Elizabeth Holmes faces up to 20 years in prison for conspiracy and fraud. All its closing arguments are wrapping up. We are live in San Jose, California for the latest. And well, this is for Caroline, all about NFTs, and they are everywhere as companies are getting in on the action. But is it working for them? I'm going to talk to the woman behind the most expensive metaverse property purchase to get her take on it all. But we'll get to all of that in a moment. Let's first take a look at where we were in the markets. A lot of volatility, not only today, but really this week. Kriti Gupta here with the details. And Kriti, another, week of losses here on a big Federal Reserve announcement 2 days ago.
Absolutely. Central Bank Palooza. And then, of course, today, triple witching. The markets have been on a roller coaster ride, Taylor. But really, we're ending the week down, and we're ending the day down as well. The S&P 500 down 1% has really been a risk-off kind of mood, as you can tell with those cryptocurrencies, which were also down 4% when you look at the Bloomberg Galaxy Crypto Index. Something to keep in mind, though, is tech actually outperformed today. For most of the week, tech has been the laggard when it comes to the stock market. Today, the Nasdaq was actually up for most of the session, ending the trading session about flat on the day. And you can really see that's been moving in line with yields, which have also ended about flat on the day. Once again, that dynamic where you saw early in the year where yields actually spooked tech, well, that's not the case anymore, Taylor. They are moving in sync, in tandem. Let's get to some of those other tech subsectors, though, because it's a different story under the hood. Tech really having a diverging trade. For example, you have electric vehicles and semiconductors actually lower on the day. If you look at those Chinese ADRs and, for example, the Nasdaq Biotech Index, those were having actually pretty good days. So once again, that tech bundle trade, it comes apart today, but it ends at, Taylor, the ultimate question, which is how much of the variant, the Omicron variant, is going to have an impact on growth. And for that, I want to show you a curve, the 7-day moving averages of those cases. And you can see that we are slowly rising up and actually hitting levels that we saw all the way back here in March. Not good news when it comes to the underlying economy, when it comes to growth. But for tech stocks, starting to see a little bit of that defensive bid.
Really well said, and a nice setup there, Kriti. Thank you so much, because we really want to pivot there next. The CDC, of course, has recommended coronavirus vaccines that are made by Pfizer and Moderna. That's for use in adults over the J&J shot. Johnson & Johnson's vaccine, of course, has been linked to rare but serious blood clots. President Biden warned that unvaccinated Americans face, quote, a winter of severe illness and death, and asked the Supreme Court to allow a federal shot mandate for health workers to take effect nationwide. Bloomberg's Robert Langreth joins us now with more. And Robert, I really want to have you give us some clarity here, because you hear record cases in New York and it makes you nervous, but it's deaths and hospitalizations that are still around 1%. Am I right?
Yeah, so right now we are getting record cases in New York City. I think we had the highest number of cases in any one day of the pandemic today. And we don't know whether it's all Omicron, but that is the supposition that a lot of it's Omicron. The cases, a big spike in cases at Cornell University that resulted in them, shutting down, going online for the end of their semester. They produced results showing that was basically all Omicron. So clearly, this thing is very transmissible and it's spreading fast. What's less really clear is, as you say, the severity, and certainly does not appear to be more severe than previous variants, and there's some evidence it may indeed be less severe. But we really need to wait and find out to see kind of how it plays out. Many of these breakthrough cases are in vaccinated people, and there's every reason to believe cases in general, if you have a breakthrough case, will be milder in vaccinated people. And certainly if you've had two doses of vaccine and a booster, there's every reason to believe if you get a case, it'll be milder. But we don't know yet, what Omicron does in unvaccinated people, and whether if it spreads enough, it can reach those unvaccinated or vulnerable people and then cause more severe cases in those. We're just going to have to wait and see and find out what the data shows.
What are we hearing about testing and the ability in testing and at home tests as well to distinguish between what is Omicron, what is Delta, what variant we are dealing with?
Yeah, I think the at-home tests are basically a test, whether you have the virus and whether you don't. They don't get into variants, and that, we could become an issue going forward with some of these treatments. That especially some of these monoclonal antibody treatments, a lot of them don't work for Omicron. You really need a sequencing test very fast to try to distinguish. If you get someone that does get very sick from one of these variants, it's a vulnerable person. You need a test that's going to tell you whether it's Omicron or Delta very fast, so you can know whether the treatments will work. So that could be an issue definitely going forward with testing. Getting the capacity to get very quick results, on the sequencing to say, is this Omicron or is this some other variant, especially if there's treatments that work for one and not the other.
Really appreciate your perspective, Robert Langreth there. Join us again. Lawyers, of course, in the trial of Elizabeth Holmes, wrapping up those closing arguments down in San Jose, California. Soon it will be up to a jury to decide the fate of the Theranos founder, all, of course, who is accused of defrauding investors and patients. For the latest, let's go out to Bloomberg's Ed Ludlow, standing outside the courthouse. And Ed, give us the latest about wrapping up closing arguments and the rebuttals that we're hearing.
Yeah, government prosecutors will soon have the final words in this trial that's been on for 3 months. U.S. Assistant Attorney John Bostic basically told the jury a list of what he called ample evidence, things extending from the idea that Theranos had concealed that they used other laboratories, standard laboratories, to run blood tests that they purported to have come from their own analyzer or machine. He also pointed out that Elizabeth Holmes wasn't this young, naive entrepreneur that the defense painted her to be. She may well have got on the road to Theranos at the age of 18, but by the time she was raising funds from investors, she was 30 years old. And as the prosecution put it, she was old enough to know the difference between wrong and right. He also talked about, as a final word to the jury, tests which did not look good for Theranos, that they discarded, they didn't disclose to investors, and all of this will be on the jury's mind when they eventually get to deliberate over their decision.
Ed, talk to us about those tests. And I know that we talked a lot about this in the last hour. Did we get any indication in this trial about the actual technology of if the blood test actually worked?
Yeah, it's interesting. There is a blurred line between the functionality of what Theranos' machine could do and what Elizabeth Holmes was pitching to investors. Remember, she is charged with wire fraud, essentially, defrauding investors. And what the defense tried to do is say that these investors should have known they were in it for the long term. That when she was telling them about Theranos, they didn't need to know about the technology. They put a chart up at one point showing Theranos' share price in 2009 at 92 cents versus $17 in 2014. And the defense tried to make an argument that the technology didn't matter. They didn't need to know about that. They were sold on the future vision of what Theranos was trying to do. It may not have been able to do it at the time, but that was what Elizabeth Holmes was selling to them, trying to get this future vision of a product that would help mankind and society.
And Ed, I think it's important to note as well, the legal system, and I know that you'll correct me if I'm wrong, it's not a preponderance of evidence. It is beyond a reasonable doubt. What are the jury thinking about beyond a reasonable doubt? If there is just one doubt, and when can we expect final conclusions?
Yeah, it's interesting. Deliberations could happen very quickly. It's a Friday. They could happen very slowly in the final week before the Christmas holidays. It's very hard to read the psychology of the jury, and we'll have to speak to legal experts about that later in the show. Remember, one of the other crutches of the defense was that Elizabeth Holmes acted in good faith. She genuinely believed in what Theranos was trying to do. She couldn't have defrauded investors if she herself believed that the technology was eventually capable of doing what she said it would. Remember, the other side of this, of course, is Sunny Balwani, longtime romantic partner and former executive of the company, and the accusation, allegedly, that he subjected her to psychological and physical abuse. And there's something there for the jury to consider. How much were the actions her own? But there wasn't really a clear-cut case on that made by the defense.
Really appreciate your time there, Ed Ludlow, and stick tight. I know we want to check back in with you in the next hour as well. In other news, listen to this. A wave of school shooting threats circulating on TikTok and other social media prompted some U.S. schools to close today and others to beef up their police presence. The threats do not name specific schools, and local and federal authorities say many threats lack credibility. This year alone, though, there have been 9 school shootings and 235 so-called non-active shooter incidents. This is according to the Center for Homeland Defense and Security. Coming up, the initial rally in those technology stocks after the Fed meeting proved to be short-lived. Apple, can you believe this? The worst performer. What happened to that $3 trillion market cap? We're going to discuss that next. This is Bloomberg. Take a look at shares of Apple. They closed about 0.7% lower on the day, but losing 4.6% for the week. And that was the biggest weekly decline since February. Now, just 1 week ago, Apple was closing in on that $3 trillion market cap. The company not quite there. Eric Ross of Cassandra Securities, of course, joins us now on Apple. And look, I know in the media we get all excited about round numbers, but down to now just about 2.8 trillion. And you really wonder, what changed? Was it a Fed pivot on Wednesday that made us all sort of rethink how we're looking at technology stocks?
Yeah, I think so. And I think that there's also a belief that what we're seeing through the rest of the year is that since volumes are probably going to be a little bit lower, that if you're caught in sort of a shorter position, we're expecting to see a little bit of a melt up. And we expect that actually to continue into the first half of next year as well.
How much of that, though, is fundamentally based? Is it iPhones? Is it, software revenue? What is it?
Well, the longer term, let's call it 2022 business looks actually very good. But right now, it seems like the supply chain issues are going to probably hold things back a little bit for the report in the December quarter in January. So we think that from a fundamental standpoint, it's a touch mixed. It's still going to be good in the medium to long term, but right now I think that what we're seeing in the supply chain from our measurements of components is that Apple can't get enough. And so they can't get enough product out the door. And even though it doesn't appear that way if you go and look in different stores for different models, they're still having trouble getting the product that they want. We think that it's going to end up being between 10 and 15 million units light for where they were expecting.
But then what was the comment from Apple to its suppliers telling them to hold back?
Yeah, because what you're seeing is there's a lot of different components. And so when Apple says hold back the components, that doesn't mean what we expect is that they have some components that are short, but not all components. So you're hearing the reports from a lot of the component suppliers into Apple that they want you to hold back because they don't need as many, for instance, iPhone cameras or batteries and this types of things that are not in shortage, but things like power management and some of the advanced A15 processors from TSMC, those are in shortage. So that's kind of what we're seeing. So you can hear both things out of the supply chain. They both can be true, but Apple could still come up a little bit short in units. Now, don't forget, they're not going to report that. We're still trying to guess that, right? Apple doesn't give us those numbers anymore. So this is all what you can measure.
Well, you're doing your supply chain checks, we know, and poking around to some of those suppliers. Let's talk about that supply chain, because Apple has done a very good job of, if anyone can control their supply chain, it's Apple. What do you make of further reports of making more items in-house to maybe cut out some suppliers?
Yeah, so first of all, you were right. Tim Cook is a supply chain ninja. I mean, he is the master at this. And this is really what he did even before being CEO, and is why he's CEO. So we really think that, if anybody has a good grip on this, Apple has a good grip on it. And don't forget, they're such a big customer that they can kind of push their suppliers around a little bit. But they are bringing some things in-house. And I think what they're doing is they're bringing things in-house where they think that they can add extra value. Because don't forget, they have a lot of cash. They have a lot of technology and IP that they own, so they can kind of go and apply this. So, for instance, for moving to designing their own processors, and now they're designing their own processors for the Mac, et cetera. They think that they have something that they can bring to the table that the typical x86 processors that Intel and AMD are making aren't really quite doing the job. They're looking for something a little bit different that has a little bit more power management built in, more cores, and a little bit better for image and video and media processing. So they're really sort of custom designing their chips for their specific applications, even at the Mac level, not just at the iPhone level. So that type of thing, we see them continuing to do. But there's a lot of parts and casings and that type of thing that Apple's just going to continue to buy from the supply chain. They clearly don't want to build a lot of factories themselves, so they're going to continue to outsource to the assemblers and the board makers, et cetera. So, you know, like Han Hai and those types of players are going to still be fine.
Really appreciate your time there and your perspective. Eric Ross of Casen Securities and your new dog, Mr. Copernicus. We wish you well. Stay with us, because coming up, we are going to get an update on GM's planned launch of robo-taxis all in California. This is after the abrupt departure of a top executive. Those details are next. And of course, as we head to break, take a look at Rivian. Shares fell to the lowest level since they started trading last month. The electric truck maker's first earnings report revealed a slower than expected increase in production. One analyst said the output warning highlights the risk that Rivian has, quote, a lot on its plate. This is Bloomberg. General Motors is saying that its autonomous vehicle unit is still on track to launch its robo-taxi service despite a change of leadership. Now, CEO Dan Ammann has abruptly left Cruise just as the GM subsidiary was applying to California authorities for permission to charge for robo-taxi rides in San Francisco. Now, Cruise president and CTO Kyle Vogt now takes that role of interim CEO. The GM president spoke earlier with our colleagues David Weston.
We believe Cruise is in great hands with Kyle Vogt, who's Cruise's co-founder, president, and CTO, and he's taking on the role of interim CEO. What I really want, the investor community to know is that Cruise and GM are totally aligned on accelerating the joint autonomous vehicle strategy we outlined on our last Investor Day, which you would have seen. And, we are leaders in the AV technology and have a lot of growth opportunities ahead, and we intend to lead. So we are deeply committed. We've got a great team there. We've got great people all across the enterprise working very hard to integrate and accelerate Cruise. So I would leave it there. And, we are all in.
So, Mark, I know you don't want to address the question of why Dan Ammann left, but address a different question, perhaps, if you would, and that is the timing of when we're first going to see commercial application of a Cruise vehicle, because there had been predictions we'd be seeing it pretty soon, particularly in San Francisco. Are those going to be delayed?
Absolutely not. That's a great question, David, and I do want to make sure that everybody understands that, we are accelerating our effort here. We are on track plus. With the deployment on a commercial basis. In fact, we are right on the doorstep, as you mentioned, of the okay from our regulators to be able to charge and have driverless vehicles for our customers. And we're doing some of those rides right now, as you might have seen, with our employees and finalizing the touches on that. But there is absolutely no delay or hesitation. It's full on. Let's go, and we're all in.
That was GM president. Now, of course, this week Bloomberg held its annual technology summit, where Ian King spoke with Renee James, the founder and CEO of chipmaker Ampere Computing. He began by asking that million-dollar question: when will chip supply meet demand?
Whether you use leading edge technology or lagging edge, that's a semiconductor fabrication comment, and where you are in the supply chain, it will change. It'll be over the next, I think, 18 months. But there are some things that have changed for good. I think that, we've seen a combination of shortages and price increases. And I do think that in many ways, some of the costs are going to continue to be at this level, even though they're clearly at shortage level. You see that, arbitrage pricing, but I think prices have gone up. I think that's just it's gotten harder. There's a lot more demand. It is expensive and takes a long time to lay in capacity. So while we may, as capacity is coming online in different segments of this very complicated supply chain, I mean, it's multiple manufacturers across multiple, geographic areas. As that capacity comes on in the next year to 18 months, we'll see easing of supply, but I'm not totally convinced the prices are necessarily going to go all the way back to where they were pre-pandemic.
Some of your peers, some of the other leaders of the industry are saying, look, this is, this was speeded up by the pandemic, but this was an underlying theme in the economy, the digitization of the economy, the need for more and more semiconductors. This isn't just the usual boom and bust cycle. We're going and we're going and we're going. Others, somebody like Hock Tan at Broadcom, much more prosaic about things. Yeah, it's great, but we're going to go back to GDP plus growth in the long term. What's your take here? Have things fundamentally changed? Are we going to see a multi-year expansion for the chip industry like we've never seen before, or is this just a moment in time?
Well, we have seen this before. We've seen it before, but we've seen it kind of concentrated into one sector. I talked about this a second ago. We saw it in PCs, right? PCs went from 50,000 units to 350,000 units in a very short window. If you look back on it, it was 5 to 7 years. So we saw it in cell phones. We saw it in mobile. These growth waves come when a new platform or a new software usage comes into play. So I do believe the cloud is new. I don't think as many companies, notwithstanding the big software companies who run their clouds, like a Microsoft or Amazon or Google or whomever, there's a lot of other people who could take advantage of the cloud that they're just beginning to figure out how to use the cloud, whether it's in the commercial cloud or on-premise, using cloud capabilities on-premise. So I think there is a lot of growth ahead of us. Will it eventually settle down? I'm sure it will. It always does in this business, but I think it's multi-year. Now, the thing that's different this time that it's very interesting and very encouraging, I think we need to consider is at the same time as there's a compute platform, and because of where I come from, we think hard about, okay, there's a new need for computing, but think about this. Autos are now compute platforms, right?
Right.
What we don't know how to define the edge very well, right? But with 5G, things that weren't able to really be, high performance compute now can be. With products from Ampere that are very low power, you can put amazing compute at the edge. So all of a sudden, there's other platforms that are taking off in conjunction with the core cloud build out. So I think that this is a bit unprecedented. I do think that, there's several years ahead of us.
This is Bloomberg Technology. I'm Taylor Riggs in New York, and let's get back to those markets to bring in Bloomberg's Kriti Gupta, because you're also taking a look at, of course, some of these tech stocks, Alibaba and Oracle as well. A little bit of a down day for Oracle.
It is a little bit. There's a lot of news going on. We're talking about the individual micro stories, and there are two that really caught my eye. I'm going to start off with the first one, which actually helped some of those Chinese ADRs outperform today, and that is what's going on across the Pacific and over into Asia. Alibaba actually targeting $100 billion worth of transactions through its e-commerce arm, Lazada, which actually operates in Southeast Asia, so outside of China, in direct competition with another e-commerce giant that is based in Singapore, and that is Sea Limited. So you really saw that new kind of approach to e-commerce actually show up in the ADRs today. Alibaba up 1.5%. Sea Limited, those ADRs down 0.8%. The other story, Taylor, I want to bring to your attention is, of course, Oracle and Cerner. Oracle, reports coming out from the Wall Street Journal that Oracle is looking to buy Cerner for $30 billion, a way for Oracle to actually get into the healthcare business, which is what Cerner does, essentially a medical records company. And check this out, it actually would be their biggest deal by a pretty huge margin compared to their past transactions, $30 billion. That, of course, pushing Cerner much higher and Oracle lower, as is classic in some of the M&A news transactions. We got to end here, though, with cryptocurrencies, of course, and really wrap it up. And that is, I really want to point out, Ethereum's gains in particular, because it has outpaced all the other cryptocurrencies to date. And Taylor, it's all because of that technology that's used in tandem with NFTs. As NFTs boom, Ethereum gets more of a bid.
Well, it's all about the underlying technology, as you say, and Bitcoin, what, fifth weekly drop, I think, this week is, Critty, and really appreciate it. We're pivoting in terms of how we're thinking about all of this and shifting from Bitcoin maybe to some of the other online underlying technology things. Let's stick with this world of crypto and turn now to Janine Yorio, of course, the co-founder of Republic Realm. Janine is behind the acquisition of the most expensive metaverse property sale in the sandbox. We're going to get to that in a moment, but first let's talk about NFTs, because Janine, I think what's so fascinating is we came in, it was about Bitcoin, then it was the underlying technology, and then this year it was all about meme stocks, and then it sort of felt like NFTs are now this new frontier, if you will. Are we getting it right when it comes to NFTs?
You personally, I think you're probably fine. I do have a thesis that a lot of people just really don't understand them still. We're starting to see a proliferation of companies, big corporations that are trying to tackle the NFT market. And I do think a lot of them are getting it wrong. They're not spending the time to really understand what's driving the NFT market. They're looking to make a quick buck. The CEO says to the CMO, go do something in NFTs, and they rush to put together a project. And I'm actually concerned that people aren't thinking about what the long-term implications are for these corporate projects that actually could potentially erode the fabric of the community that's sitting behind NFT projects.
What is then that long-term perspective of the companies who are getting it right? What are they doing?
The ethos of crypto is that it's anti-corporate. And so big corporations, by definition, are antithetical to NFTs. And the NFT drops that are getting it right start first with the community. It doesn't start with a big company doing something that's designed to further that company's brand, but rather listening to a community that may not currently have an online home and offering a way for people in that community to join together. And we've seen projects that get it right have grown exponentially this year. Bored Ape Yacht Club, which came literally out of nowhere, now is probably one of the most high-value brands in the world because they listened to what people want and they built a brand around apes that look like mutants, and it stands for something that's really important to the people that own them. And we've seen other projects come along and do something similar where they found a niche that it didn't have a place to meet online, and they built an NFT project around that. So the NFT projects that think about community first are doing well, but all the others are struggling.
Well said. And it's funny when we think about some of the new frontiers, it's all about the metaverse as well. And it was really interesting talking about, I believe Republic Realm purchased the largest land, and we say that in quotes, of about, $4.3 million in the sandbox. What is that, and what drives that value?
So we bought a really big portfolio of land parcels in the sandbox, and our objective there is to co-develop it with Atari, which is a brand that is much loved and widely recognized all around the world. We're so excited to do something with them there. But we bought a portfolio that's so big, it's almost like buying an entire city inside the sandbox. And the sandbox is a metaverse that's really cool. It looks a lot like Minecraft, which is the world's most popular video game, but it's built on the blockchain. And it's actually just launched in alpha. It's really exciting. It's designed for adults, but I think it's going to be huge.
And with the sort of growing influence that this has, regulation may not be far behind. What is there, if any, appropriate regulation around these types of products?
I think, like with all crypto, anybody playing in this industry is trying to figure out where the gray area stops and where the boundaries are. There is no really clear guidance yet. I think there's a lot of cases for why this is something that ought to be treated like a collectible, like a baseball card. And so the players in this space are operating under that assumption. And I think we'll continue to do so for the next stretch.
What about how you're thinking of educating the people and maybe Gen Z or maybe younger to get involved in this?
So I believe the next stretch for the metaverse is going to be about building the workforce that's going to build the metaverse. And while people keep hearing about the metaverse, very few people actually understand what it is. So one of the key tenets of what we're doing at Republic Realm is educating people. We have an academy where you can take classes from real world professors and learn how to understand the metaverse and then also be part of the metaverse economy and build and do 3D development. We're also creating NFT projects that are designed to teach people how to create a wallet, how to buy an NFT. In fact, we're launching a project next week called GFT, which are NFTs designed for gifting, and they're on our website, and they're designed specifically for people that this is their first NFT. Or if you are big into NFTs, but you want to teach your friends and family about GFTs, it's the perfect holiday gift for procrastinators, because you can go online and buy it the day of December 25th, and it unwraps on Christmas Day. So it's a really cool NFT project, but it's meant to be simple enough that everybody can understand it. And I think that's a core principle of NFTs, is bringing more people onto crypto. It's warming them up to it. And that's why Ethereum is performing so well, because the NFT market is creating a wave of mainstream adoption.
Well, that's a good segment, because we're going to be speaking a lot about some of the supply chain issues as well. So that sort of instant gratification and instant present, as you said, works well. Janine Yorio, really appreciate it, co-founder and CEO of Republic Realm. And coming up, well, we just said it, right? The holidays. I think, are we 8 days from Christmas? And yes, there is still a supply chain crunch happening, but it might be an issue well into next year as well. My next guest, working hard to help sort that all out and the technology behind it. This is Bloomberg. Amazon's customers in the UK will now be able to pay in monthly installments. That's a result of a new tie-up between the online retailer and Barclays. Purchases of $133 or more on Amazon will be eligible for the new flexible payment method. Buyers will be able to spread out the costs from between 3 months to 4 years. That folds us nicely into the supply chain crunch. Of course, it's been driving inflation higher, and well, it is here to stay. Nearly $65 billion worth of clothing, toys, and consumer electronics are at stake this holiday season. Ports are scrambling to clear the logjam in what the Port of LA's executive director calls a game of whack-a-mole. Let's bring in the guy who might try to be fixing the whack-a-mole, Transfix CFO Christian Lee. Help us untangle this. And what do you see is really the technology that you're using to make this less of a whack-a-mole game?
Yeah, well, first of all, thanks for having us on. We love talking about supply chain and how we can help make it better. There is a number of issues going on right now, very sort of tactically around the holiday season and sort of COVID and all the things that are happening there. But the reality is these have been issues that have plagued the system for a long time. It's lack of transparency, it's lack of visibility. There really is no good automated technological way for carriers and shippers to actually work together and match freight sort of at a network level and then understand where everything is. People don't have visibility. They don't understand what's actually happening. And so these are the problems that you really need sophisticated data tools for, advanced analytics. And those are the things we're bringing to shippers and carriers to help make better matches, drive inefficiency out of the system, and reduce a lot of the waste that's quite frankly causing a lot of these problems that exist today.
Christian, it was interesting. FedEx came out with their earnings reports yesterday, and I was speaking with an analyst, and they said that all of these logistics companies are investing in R&D and AI and better models, but those models missed 2020. And didn't forecast it accurately. And I know that you could say that that was an anomaly, but how are you confident that AI and some of the technology can properly forecast given how quickly everything is changing?
Oh, it's such a great question. We actually, so we believe two things fundamentally. First, we believe as a person in the middle. So we have these tools, these machine learning tools, all of this matching technology that we're using, but we believe it gives human beings the ability to make better business decisions. And so we actually grew revenue 40% in 2020 because we were able to both use models to better match, but also to understand we have deep logistics expertise at the company as well. So we believe in matching technology with deep human expertise to do both of that. So we actually had one of our better growth years in 2020 because we were able to understand and marry some of the technology with human beings, which really allowed us to grow. And we've seen that growth continuing into 2021. So that's been really exciting for us.
Is any of this getting better anytime soon?
It's going to take time. We look, the new COVID, is out there, and there's going to continue to be bumps in the road for sure. Normally, what would happen in a cycle like this is obviously there'd be a lot of demand, and so new trucks would come on the road, and that would ease some of the concerns. The issue is the trucks have all the same issues that the car companies have. There's no chips. There's no, they're constrained by the supply chain of getting new trucks on the road as well. And so we don't see this really loosening up anytime soon. What we do think is that the solutions we're providing can help shippers and carriers get more efficient and can drive some of the waste and the problems out. And actually, if you think about the fact that 30% of miles on average are driven empty each year, if you think about just even eliminating half of that waste, that is a massive amount of efficiency that can be brought into the system that can hopefully over time bring prices down and bring things more into balance through just better efficiency matching tools and technology.
What does that mean, though, for prices up for you? The pricing power that you have for these companies desperate for a solution, are you seeing prices that you can raise?
So we are fundamentally about matching supply and demand. And so this is a multi-$100 billion market, right? No one player is driving prices in this market, just to be very clear. It's driven by a lot of other macroeconomic factors. So what we see is actually a huge opportunity to showcase what we can do. And it's not just the matching, it's then the visibility and the analytics where some large companies can actually understand their networks better through us than they could on their own or before. And so we actually see this as a real long-term shift where companies now fully understand that it's not about just-in-time inventory or getting the cheapest price. It's about how can I manage this end-to-end? How do I get visibility? How do I have better relationships across the entire ecosystem that help me understand where I need to be, where there's inefficiencies, which warehouses are working, which are not. And so we actually see it as a real long-term opportunity of better supply chain visibility, better data analytics to help drive out that waste and help companies be more efficient in the way they move things around the country.
Really appreciate it. Christian Lee, CFO of Transfix. Come join us again soon. Hopefully one of these days supply chain issues will be fixed. Coming up, we're going to take you back out to San Jose. We have the latest, of course, on the Elizabeth Holmes trial, all as the jury prepares to decide her fate. That is next. This is Bloomberg. Chinese spies have been accused of using Huawei technology in a secret telecom hack. Bloomberg has learned that it took place in Australia in 2012. Australian officials say it began with a software update from Huawei that was loaded with malicious code. U.S. authorities have warned for years that Huawei products pose a security risk for any country that uses them. Let's return now, though, to one of the big top stories. Lawyers in the trial of Elizabeth Holmes, they are wrapping up those closing arguments in San Jose, California. Bloomberg's Ed Ludlow back with the latest. Take it away.
Taylor, the final word has been said in this case. We're through the rebuttal. The deliberations will start. So we go to somebody who knows this domain. Andre Spector, a partner at Bryan Cave, Leighton & Paisner, and also a former federal prosecutor who has spent time since advising corporate clients, board directors about criminal and government actions. Andre, a simple question to start. As we enter deliberations, what is in the mind of these jurors?
Well, what will be in the mind is the elements of the crime that they'll be charged. For substantive wire fraud, the government will have to prove beyond a reasonable doubt that Ms. Holmes intentionally deceived investors or patients to obtain their money, and that she did so through material statements or omissions. That means statements or omissions that were capable of influencing the investors and patients. That's going to be the focus of the jurors.
It's been a really long 3-month trial, and yet we packed the conclusion into a single day on Friday, right? We got through the closing arguments from the defense, the rebuttal. Do the jury remember all the facts of the evidence, the legal principles that have been discussed, or do they go off the theater of the last 3 months?
Well, the jury charges will be fresh in their minds because the judge will just have instructed them. But the scheduling is very unusual, a few days before a major holiday. And there are a couple of schools of thought on that. Some lawyers think that's a great thing for the prosecutors, that the jurors may want to just get it on, get over with their deliberations, convict, and return to their families. Other lawyers think that jurors tend to be more compassionate around this time. They're going to be going back to their families. They'll know Ms. Holmes as a young parent, and they may feel bad for her.
Okay, so who does that scenario favor? We're 5 days away from Christmas Eve. It's a Friday. The jury may want this to be done quickly. Is that in Elizabeth Holmes's favor, or is that in the prosecution's favor?
It's unclear. Personally, I think these kind of generalizations are overblown. I think the reality is that most jurors take their oaths seriously. They've sacrificed so much of their lives already. They want to get this right. There was a big trial in New York a few years ago, the FIFA case. There were 3 defendants, and it was right around this time, right before the holidays. And the jury got the case just right before the holidays, just like this. They convicted 2 of the defendants, and then they returned after the holidays, and they acquitted the 3rd. So this just shows you can't generalize. I think it all comes down to the evidence, and I think the jury will really try to get this one right.
Andre, there was a large body of evidence that suggested or demonstrated even that the Theranos analyzer did not work to the full effect of what Elizabeth Holmes and other Theranos executives said it could do. There's a lot of evidence that suggests Elizabeth Holmes exaggerated at least the capabilities of the machine, but also misled about what the company was doing. At the same time, the defense kind of relied on this idea that Elizabeth Holmes was acting in good faith, right? She really believed in what this company was doing. Which argument is more powerful?
This is a strong case for the government. At the end of the day, it is a strong case. It's not overwhelming on every element, though. And there are definitely soft spots, and the defense has done a good job of exploiting those soft spots. So, first of all, like in most white-collar cases, the evidence showing intent, which is what you just touched on, is entirely circumstantial in this case. There's no smoking gun. There's no recording of Holmes saying to someone, I'm going to lie to these investors, and I'm going to take their money. That doesn't exist in this case. And the government's case also lacks a little bit of emotional appeal. The picture you get from all this evidence is that Holmes was not the sort of traditional fraudster who wanted to steal the investors' money and run. She really seemed to believe in the company and in herself. She never cashed out, even though she could. So that may not matter legally at the end of the day. You can't lie to investors and patients, even if you have the best intentions, but it could matter to jurors. It could raise the bar for reasonable doubt. So I think the evidence is strong. This is a strong case for the government, but there is definitely room for reasonable doubt, especially on intent.
Yeah, Andre, what might be hard for the audience to understand is Holmes faces 11 different counts of fraud, essentially, right? And the jury can find her not guilty of some and guilty of others. How does that work? How does the jury go through each individual charge and make that decision? And what does it matter whether she's guilty of all 11 or just some of them?
That's right. So the verdict form actually lists all the 11 counts, and they have to mark guilty or not guilty on each one. And they'll work through the evidence, and they'll deliberate on each count. They could disagree on some counts. There could be a mistrial on some counts. There could be conviction on some counts and acquittal on others. But practically speaking, there isn't a big difference between a conviction on one count and a conviction on all 11. A conviction, either a substantive or a conspiracy wire fraud charge, which is all these charges, would expose Holmes to a potential maximum sentence of 20 years. So I think it's safe to say she's not getting all 20 years. That's the potential, just one count. And at sentencing, all her conduct, including conduct for which she was acquitted, could be considered by the judge.
Right.
Because the standard to prove any disputed fact That sentencing is much lower than reasonable doubt. So, in other words, if the jury finds the government did not prove beyond a reasonable doubt that Holmes defrauded a particular investor or patient, the judge, applying a lower standard, could easily disagree. So all that matters for the government is a conviction on one count to get to sentencing.
Andre Spector, incredible insight from somebody that knows this domain well, partner, of course, at BCLP. Thank you very much. Taylor.
Thank you, as always, there to our Bloomberg's Ed Ludlow out there on the ground doing what he does best, reporting for us outside San Jose, California. That does it for this edition of Bloomberg Technology. And stay with us. My colleague David Weston, he's next with Wall Street Week. I'm Taylor Riggs in New York. You're watching Bloomberg.